Today on Off the Clock, we're going to be discussing the new changes to federal tax law impacting tips and overtime wages. You won't want to miss this one. It'll be quick, in and out, just what you need to know.
Welcome to Off the Clock, the webcast of employment attorneys at Miller Johnson, where we discuss what is happening in the HR world and provide practical insight and advice. Today we're talking about something that's not always within our HR subject matter, and that is taxes.
We avoid it like the plague.
You don't know this about me, but my favorite class in law school was tax law.
Really? I did not know that.
I think it's fascinating.
You may not know this about me, but I never took a law.
You
a
never
class
took
on tax.
Well,
I never took it.
yes, but one of your areas of expertise is the Fair Labor Standards Act, as all of our listeners know.
I love it.
And because of that, you are up to speed on this particular tax benefit. Let's call it that.
Sure. Yeah, it certainly is for some people. It got a lot of play during the campaign, so let's just jump in, shall we? Because I think on this one, people just want to know, what do I do?
What does it mean, and what is it that I'm supposed to do?
There's not a lot of chit-chat and banter we can have, frankly. We've exhausted the well of chit-chat on taxes. Okay, what happened? President Trump signed a huge piece of legislation on July 4th. It did a whole bunch of things, including two things that are really relevant to our HR professionals. And it didn't get a ton of play at the time just because there were so many things in the legislation.
Sure.
But it had to do with removing federal income tax on tipped wages, because tips are considered wages, believe it or not. Yep. So tips and overtime wages. But of course, it's the federal government. It's not quite as simple as that. So let's just talk about what it is and what it isn't. We're going to start with tips, and then we're going to have the same conversation for overtime. So the time period for tips, 2025 through 2028 tax years, those tax years, that's it, unless Congress re-ups it. So it's not forever. I think that got missed in the news. And also, remember, I said 2025. Yeah. And it was signed on July 4th. The year was, about half over? Mm-hmm. At that point, so what do we do with the fact that 2025 is half over? Okay, I'll get to that in a moment. The basic rule is that employees can deduct up to $25,000 in tip income that came directly from tips, from their federal income tax obligations. Now, that's a mouthful, but it's very specific.
Well,
each word was chosen.
Yes, it's important because since I took tax in law school,
take it away.
There is a difference between exemptions, complete exemptions from taxes, and deductions, right? And so when I hear the word deduction, what that's telling me is that these employees are going to get the benefit of this when they file their own income tax return. Yes. Starting in April 2026.
You are exactly right.
And what I also hear probably is that also means that the withholding that employers make right now does not change. They're not supposed to stop withholding federal income tax from tips. Instead, they're supposed to keep applying the same withholdings that they have been federally, right? And for state, federal, and local tax withholdings, do the exact same thing. And then the employee has to take action to get the benefit of that deduction when they file their own return.
So the important takeaway for our clients is there's no change in how they process payroll. But we do now have to report tips separately from other income on the W-2, and that is new. And I do expect a new W-2 form to be coming out because of these changes. And we expect a separate line for tips separate from wages. Right now, it's combined. So you're going to have to keep track of the tipped income separately. And PSA, this is not a change, but I feel like people need a reminder sometime. All tips count as income, cash and non-cash, right? So count them all up, list them separately on the W-2 W-2s, track them separately. If you haven't been tracking yet for 2025, the law says you can adopt a reasonable method, quote unquote, to estimate the qualified tips for the W-2. We expect guidance from the IRS on that before the end of the year. Say, what is a reasonable method for estimating those tips? Finally, a point to remember, as I was thinking, I think I'm going to start getting paid by tip. It will be my hourly wage, but I'm going to call it a tip. Problem with that, this deduction is only available for individuals engaged in traditional tipped work. And we're expecting guidance from the IRS on that.
Oh, good. Is it going to tell me who I should be giving tips to and who I shouldn't? Because I find that
It's so hard.
I find that very confusing now. I never know.
Lastly, and this doesn't impact employers, but in case your employees have questions so they know, there is a phase out for high income workers. So individually 150, if you file jointly 300,000, it will start, the amount of the deduction you can take will start phasing out.
High level for the payroll and HR folks on this who are listening when employees come to them and ask why they're still getting quote unquote taxed or you're still taking withholdings. The answer is that's something that you, employee, take advantage of when you file. You're going to get that money back after you file in 2026 for 2025. Got it.
Exactly. Okay, let's talk about overtime, which applies to everyone. There's some similarities. The time frame is the same. So it applies to tax years 2025 through 2028, will sunset unless Congress extends it. And it is retroactive back to January 1st, 2025. So it covers the entire tax year. Non-exempt employees, we're only talking about non-exempt employees here. Very important. Non-exempt employees can deduct up to $12,500 or $25,000 if they're filing jointly of qualified, yes, I used air quotes, hang on to the word qualified, overtime pay from their federal taxable income each year. It's a deduction, and now we know that means employers don't change the way they run payroll or withholdings, but at the end of the year, the employee gets a deduction, right? Can get a deduction for up to $12,500 for qualified overtime wages. Just like tips, we expect to see a separate box on the W-2 now.
I see, for overtime.
For qualified overtime wages. So you do need to keep track of that separately.
Yeah.
And here's where we get to what is qualified overtime. Because a lot of employers think, well, I do track overtime separately. That's easy breezy. Maybe for some employers. But the only overtime wages that qualify for this deduction are qualified, which means they are federally required. They are required by law, i.e. the Fair Labor Standards Act, coming back to that. That means it's for hours worked over 40 in a work week and only up to time and a half. We have clients that pay more than that, right? For employee relations matters, to incentivize people, to reward people, to meet the market, whatever the reasons are. Sometimes they pay double time, for instance, on certain days. Sometimes they say if it's longer than 8 hours in a day, we'll pay you, right, extra. But for this deduction, it's only over 40-hour time and a half overtime. So if you are doing other types of overtime, you're going to want to calculate this separately.
Every so often, I see a policy that a business has, and they voluntarily choose to count certain paid time off or time off toward as hours worked for the purposes of overtime. Their policies state that if an employee uses PTO in a week, that counts as hours worked to determine. So in that case, that is going to be a nightmare.
Qualified.
That would not be. So they are going to, that those employers are going to have to go back and figure out, separate the overtime that got paid because they voluntarily counted, for example, PTO as hours worked in that week, from overtime that got paid only because an employee actually worked more than 40 hours in a week.
That's a great point. You're
Wow.
absolutely right on every point.
That's a big deal for those
And
businesses.
honestly, that's an important reminder for clients that don't realize they don't have to pay for hours not actually worked. Those don't actually count towards the 40-hour threshold. I think a lot of people think they do, but they don't. So this, depending on how employers pay overtime now, this could be a nothing burger or it could be a really big deal.
It could be, and when I say big deal, I mean record keeping, right? At the end of the year, they're going to have to know how much overtime was paid based solely on what the Fair Labor Standards Act requires.
Yeah.
And that may be a heavy lift for employers that are voluntarily paying overtime in excess of what the federal law requires.
For some employers, it might be. So it's a great time to go over your overtime pay practices.
For our listeners who are voluntarily more generous than the Fair Labor Standards Act requires for overtime, I would say start now, trying to figure out how you're going to track that. Don't wait until the end of the year to try to figure that out.
There is a parallel with the tip provision that for 2025, employers who have not started tracking this separately yet, which no one did, frankly, before this law passed and probably still aren't, you can use a reasonable method to approximate, and the IRS is going to get us some details on what is reasonable for 2025 only. So it is a really good idea to start figuring this out now because it will take time. Just like tips, this is only federal income tax, right? So it doesn't impact payroll taxes, FICA, as well as state and local taxes.
And again, it's a deduction. It's a deduction. So for employees who work a lot of overtime, what that means is they may have a $12,500 deduction that they can take at the end for when they file in 2026.
And there is also, just like the tips, there's also a phase out for high income earners. So 150,000 single, 300,000 joint, it will start phasing out for high earners. And that is our quick, down and dirty, a little bit fun, I can't believe we had fun on a tax episode.
We have fun no matter what. You know that, Rebecca.
We can do it on a tax episode. We can do it anywhere. That's all we have for you. Call us if you have questions.